Well, hello everybody, it's Decentralized Dave, and with another quarterly presentation I've made for you guys. And I have like 30 slides to cover. Actually, most of them is still bullish, so really good stuff, good stuff, good stuff. But of course, the bearish slides are more, and especially when it comes to equities, when it comes to 2025. But I'm gonna get to it very, very soon. By the way, since we have 30 slides to cover and I want to do it all in this one presentation, I really should speak less than 2 minutes for each slide. So let's just go, really, let's just try to go as quickly as possible. Okay, so this is what I always should start with. It's the recap of my previous conclusions. At the end of each presentation, there is a conclusion. And of course, it's very important to always look back at your previous calls and conclusions. And it's important to be able to reflect on that and learn from it. Whatever, like what went right and what went wrong, and improve in what went wrong and sustain in what went right. Like if you have a strong side, like you should definitely cherish that, right? If you have a weak side, you should improve it. And when I look at my previous conclusions, I actually feel that actually lots of things came true from my previous conclusions. So even more reasons for you to watch these presentations and also tell the others about to watch them. So for instance, I have predicted here in the August 2024, like the end of the summer 2024 to be likely very good entry into S&P 500 as well as crypto. And that's basically exactly what happened. It was a dream entry for crypto, a dream entry. Then I was talking about the reset of the meme sentiment. I was talking about it in the July presentation, and that exactly also happened. I'm gonna get to it in this presentation about the meme sentiment. Also, I was expecting Bitcoin dominance to be going up, which also happened. Um, the only thing that was actually false, that did never happen, was that here I was speculating in July 2024. I was speculating that we have to go to 30,000 Bitcoin in order to reset the meme sentiment. As it happens to be, we did not have to do this. We reset the sentiment on the way up. This is something I didn't see coming. So definitely these figures, they did not come true. And I was also talking about the fake pump going as high as 95K. Well, obviously we are over 95K, so this is more or less like a neutral. I can't say that this is something that went wrong because I said potential fake pump, so I just include this as a neutral statement, which basically can't come, which I'm not able to evaluate whether it came true or not. Okay, and now let's start with my bullish arguments, okay? So we have just had a very recent funding fees reset. I'm not sure you've noticed. I know people don't watch, and especially small cryptos, people don't watch them that closely. I know they just look at the market cap. But if you have been watching very closely, like I, then you would have noticed that on the 9th of December there was a really serious and severe, and especially mid cap, small caps crash in the market. They went down 26% in one day. But also all the altcoins basically went down a lot. Bitcoin no. And what it actually happened is that it resetted the funding fees because the funding fees were really spinning out of control. So what are funding fees? Funding fees are basically the fees that you have to pay when you have open leverage on the exchanges, either long or short, but it majority of the time it's just longs because shorting is just extremely risky. And like I don't even know anybody who would make good money on shorting. And by the way, I don't know anybody who would make good money on longing. I know a guys who made good money on longing, but then they got liquidated on so many times that they basically lost it afterwards, basically. So, open leverage is not something that I recommend, but of course, people do that. They always will. It's gambling, and people are gamblers. And so, what happened was when you can see this beautiful light blue color, uh, uh, whatever color that is, teal, maybe. When you see also here, you see how the funding fees were really growing. This is for Bitcoin, this is for Ethereum, but all the other cryptocurrencies, they basically they have the same structure. You know, it's basically that they were growing in funding a lot recently. And after this, after the 9th of December, they are flat, they are all reset. And also when you can see this is a chart of the liquidations, this is actually, this is a 2 years. This is all the way to the start of the cycle for January 2023. And as you can see, this we have never had so many liquidations this cycle as we had just on this 9th of December. So this is bullish stuff, good stuff. This is how the funding fees look today, or actually yesterday. I took this sample yesterday when I was preparing this slide in particular. And as you can see, this is beautiful reset. Like it's all 0.01. That's the neutral funding fee, right? When you have lower on OKX, people were shorting Bitcoin, but on OKX the funding fee changes quickly. But yesterday, just yesterday, people were shorting Bitcoin, Ethereum, and Doge on OKX, and OKX has lots of open leverage. It's very important exchange. This is very telling, guys, and this is a bullish stuff, good stuff. Now, Bitcoin versus altcoin volatility. This is from Bitcoin Data 21 from Twitter. I'm also going to give him a tag on the Twitter when I release this video. I have been watching, you know, I don't follow that many guys. You know my opinions pretty much. And I always also scout a lot. I also look at the track record that the guy has from before. So I always like, really, I am very picky. I'm very picky who I follow, and especially who I tell you about here in the presentation. And I'm telling you about this guy, Bitcoin Data 21, because I think that some parts of his work are worth checking out. And he shares quite a lot of his analysis for free. I don't want to now go deep into analyzing his work. This is not a presentation about it, so I don't want to continue talking about him, but this is one of his work. And he is saying he's telling there that basically this is the chart right here. This is the chart of the Bitcoin versus altcoin volatility. And as you can see, the volatility is nowhere near this top channel. And we have always in the cycles, we've always, or past few cycles, basically, we've hit this channel always. Although in the few cycles ago, we hit it twice. And the last cycle, we hit it once. So my 5 cents is that we are not going to hit this cycle. No, this is my 5 cents. But again, this chart still looks good. Still looks bullish because it does look like altcoins are still not done versus Bitcoin this cycle. And however, I want to remind you that we have had in the past, basically every time when we had an alt season, we had a crash afterwards. So I just want to remind you as well at the same time that we are all wishing for even stronger alt season that we've already had, and we had alt season the past weeks. I'm gonna talk about it very soon. But when you check like that, this is May 2021, and this is December 2017. You can see there is a total hue is this whitish color, whitish or dark white color. And you can see there that this is basically the alt season, because you can see this is Bitcoin. This is chart of the Bitcoin. You can see that the Bitcoin basically stopped growing at 64K, but the alts were basically doubling in the process. Bitcoin only went sideways until Bitcoin altcoins doubled, which was basically the top of the alt season. And after that, we had a very, very, very strong crash. Very strong crash. And basically, identical thing happened in 2018. But also Bitcoin started, it actually topped at 20,000 in December, and then it started going sideways. In the meanwhile, altcoins were wild. They basically doubled. And after that, we had a very strong, that was basically the top of the cycle. So be very, very careful if you wish for an alt season. But bullish stuff is that we have not yet seen such volatility to say that, yeah, this is definitely the end of the alt season. This is the biggest alt season we're going to see, according to the chart that I just showed you. Another technical bullish stuff is Ethereum versus Bitcoin. When we are talking about alt season, of course, we are talking mostly, because Ethereum is so large comparing to the other altcoins, we are talking basically about relationship of Ethereum versus Bitcoin. And this relationship is improving. This is my chart that I've drawn. There are two trend lines, blue and light green trend line. And the blue was basically from the bullish trend line from the previous cycle that got broken in 2024 and now is resistance. And I believe this resistance is going to be extremely strong, very strong resistance. I am skeptical we're going to break this one in this cycle. However, the other alt season is the other, other trend line is here since the start. As you can see, it starts all the way in 2016. How many years is this? And then it was beautiful support in 2020. And now we've lost it. We've lost it for like 1 or 2 weeks. That was heartbreaking for me. Like when this was happening, I was seriously thinking that the altcoins are done forever, or at least Ethereum is done forever. And I was seriously just thinking to turn bearish on Ethereum overall. But then it looks like we have recaptured it, and now we are retesting it back, which is very, very nicely bullish. And I think that this could actually now be continuation. But it's very important that this trend line holds, but also these moving averages, the blue lines, important is that this holds. So it's very, very important to see continuation, Ethereum versus Bitcoin. But there is a historical strength in Q1 for Ethereum versus Bitcoin. So, but I'm gonna talk about it very soon. Okay, so now this is a trend line that I found for you guys, and this is good stuff again. Okay, good stuff, good stuff. So this is total free index, and this is total Q index. Okay, this green window here, that's basically just zoomed in of this window here from this chart. Okay, so it's basically 2024 situation, and this green window is zoomed in just this part of the chart. I believe that you understand the way I have drawn this slide for you. And what I'm showing you here to the left, that's kind of a couple of years perspective of total free and total Q indexes. And there I have found the trend line. The trend line is basically identical, is the trend line which was a resistance in the cycle of 2018. Okay, the top of the 2018, that's where the trend line starts. But then it had very interesting reactions at the start of the bear market 2022, when it was the point where we started the first bear market rally. Okay, so the bear market rally that started in the spring of 2022, or actually in the winter even, because in February is still the winter. So it was a support. So this trend line is working, and the most decisive evidence that this trend line is working is that it was after resistance in the March of 2024, because it basically became to that trend line and came back all the way down and corrected a lot and for quite a long time in 2024. That's quite a corrective year when you think about it. And now on daily, when you look at daily, this chart, when you look at it in daily, the past few months, you are going to discover that we are not only above the trend line, but we retested it back. And we retested it back for both, for total free and for total Q. We retested it back and bounced from it. And this is very, very bullish stuff. Very good stuff, guys. Very good one. So I think that we should not go back below it. Definitely not on weekly. But also I write here in the note that on weekly we have not yet retested it, because this retest was on daily. On weekly is not seen. On weekly there is just this beautiful God green candle. So I'm speculating that we are going to come back on weekly here in the future. But we are holding that, and it's very bullish. Now, this is the historical strength I talked to you about. And like, this is very self-explanatory, guys. Just look at this is Ethereum monthly returns. Holy moly, just look at these beautiful double digits, median and average both. January, February, March, but even in April and May, quite honestly. But right now, what I do care about the most is the January, because that's actually the best month of all. That's the most bullish Ethereum month in the history. And look at Bitcoin. January is nothing. It's just basically like meh, like sideways. So it's historic strength that Ethereum is just tends to jump versus Bitcoin in January, and January starting soon, guys. So like rejoice, because at least as far as the historical seasonality is telling us, this actually means a good time still, even though we've already had an alt season, and I'm gonna talk about it soon. So yeah, January is coming and winter is here already. Uh, Actually, kind of winter is actually, yeah, one, like there is two classification of seasons. According to one of the classification, winter starts at the 1st of December, but the astronomical winter starts on 21st of December, so hasn't even started yet. Another bullish argument, CryptoCon. CryptoCon is another analyst that I've already featured in my presentations. I have respect for him, although I do think he also tends to be, at occasions, kind of a blindly bullish. But okay, like it's still fine. He's still a really good, in my opinion, analyst, but he's already widely followed. That's a big downside, because you don't want to be where all the eyes are in the investment world. You do not want to be there. Or actually, yes, you can have a look as well, but the most alpha and the best know-how how to make the best moves in the market, you are likely going to learn not where the eyes are, but where they are not. CryptoCon has many eyes on him, but still, lots of his analysis seems to be working really nicely. And I wanted to tell you that he has drawn this beautiful FIB extensions, okay? And he's selected the retrace point, this one, which is weird. I have no idea why he picked that one. Maybe he was just trying to mess around whatever works. But I would have never done this, but okay. And of course, then he picked the bottom of the bear market as retrace point 0. And then he drew a Fibonacci's from there. And as you can see, all of his extension levels seem to be hitting some kind of important local tops. And the next local top, according to this FIP, is 109,000, which I thought is very, very worth telling you about. And I think it's very bullish, because 109,000 has not yet been hit. And in the current environment, I have reasons to believe that if Bitcoin goes another 10% approximately higher, I have reasons to believe that altcoins are going to make more. Now I just wanted to compare to my Fibonacci extension. So this is just my classic normal way of measuring Fibonacci's from the top to the bottom of this cycle. And there we have hit to the precise, we have hit the first extension 1.618, which is at 102,000. So this very well could be a big rejection from where we are, from the very level, very prices we are in at the moment. However, as well, I just wanted to compare in the past, the previous cycle, we have hit the higher extension too, and only then corrected. And that was even January. That was a small correction, but it was the first sentiment reset in January 2021. Of course, then we hit another extension and another one. We hit 3618 extension, and only from there we corrected, and we corrected seriously there in the summer 2021. So also that's why I include this as bullish, because potentially my next extension would be at 122,000 and not at 109,000 where CryptoCon has it. But at the same time, there is also lots of bearishness in this slide, because it also means that we could as well see a quite fat rejection from where we are currently. And I'm gonna talk about it soon. Now, this is inverse monthly RSI on USDT. This chart is quite confusing. You actually need some time to understand it, to keep looking at it. It's yet another work of Bitcoin Data 21 from Twitter. Look him up. So what he did, he inverted USDT dominance chart, and then he measured the RSI. He also inverted this, and there, when you look at this, there is a channel, and when we hit the top of that channel, when we hit the top band of that channel, that was basically some kind of local tops, okay, even local tops, because the last time we hit it, it was like March 2024. And then before that, we hit it in the spring 2021. Before that, we hit it in the middle year of 2019, because that was 2019 was the echo bubble month. So basically, yes, like this is very important, like, or interesting at least, and it might actually work again. That when we hit this, we are going to have a local top, but according to this indicator, the local top is not yet happening. And it makes sense to actually look at USDT dominance, because USDT is such an important element. It's like everything in crypto. There are bears that have been saying that basically all the crypto bull runs is just based on the USDT, and they're printing, and they might be right after all. So to be looking at the USDT dominance is a very good idea, in my opinion, and this is quite creative what he's done. So I think that, yeah, if this channel is hit, then we might really see that local top, and it is not today. So this is from the charting guy. I don't know this guy very well, but I just came across this analysis, and it was pretty shocking to me that somebody would think of this. But I have been intrigued by this, and I have decided to include it in my presentation because it's just so freaking bizarre that it might work. Because this is another perspective, Bitcoin top dates related to solar eclipses and blood moons. So if you don't know what the blood moon is, just Google it. I don't think you care that much anyway. So, but I am kind of a lunar guy myself, meaning that I do notice that there are a couple of things in the nature affected by the luna and their it phases. And of course, like if the ocean current can be affected, of course, all the living things, including human beings, are affected, and also human psychology in the market is affected. And what this guy has measured is that we have had some kind of a cycle peaks or very important peaks in the cycle, like couple of weeks before a blood moon, and the next blood moon is on 10th of March. So he is actually suggesting that late January 2025 we are going to see some important peak. So this is very bizarre theory, and it's so bizarre that it might work out. Okay, guys, and this is a special thing for me because presentation after presentation, I've been telling you about how unhappy I am with the meme sentiment being so crazy. And guess what? I have memes in the bullish arguments because guess what happened? Memes basically crashed. Okay, so we are in a very strong bull market. I've never seen this coming, but it happened. It also caught me by surprise and caused my portfolio to dramatically downperform everybody else. Basically, I am not having good month personally in November because of this, because so much of my portfolio was in the meme coins, and meme coins basically seen outflows immediately after the Trump won the elections. What happened that altcoins started doing really really well, and at the memes expense basically they crashed, and the liquidity have been ever since flowing from meme coins into fundamental altcoins, which is by the way very healthy. And it also shows that this cycle is likely not done, because this is exactly what should be happening during the cycle. And the meme and the reverse flow of liquidity, which I believe will really come. So do not rotate all of your meme coins. If you have to rotate, like, and maybe it's also too late to rotate even today, because to fundamental altcoins, because the meme coins will see the inflow back from these altcoins. I guarantee you they will, but it's probably going to happen exactly like it should happen, which means that it's going to happen at the end of the cycle. That's the healthy way of doing things. I have just shown you some charts, and this is this white fat line. Okay, it's total free index, guys. This is always total free, And you can see in these red areas, you can see what Apu Staya did until the total free was like doubling, like from 600 billion to 1.1 trillion today. And Apu Staya basically at the start of this move, it was going up, but then it basically crashed. So ever since like mid-November, it was just crashing and everything else is going up. That for GigaChat, although GigaChat has recovered to the all-time highs, I believe it's because of the rumors of the exchanges listing it. But Retardio did in absolute inverse. Retardio is just crashing, and as you can see, total free is just skyrocketing every more. The same for Popcat, very famous, very a popular Solana meme coin, very big billion, I think it's billion plus market cap now, and it's just basically crashed while total free index is going up straight. So it's very clear to see there is a big outflows from meme coins into fundamental altcoins. So, and the meme sentiment has been reset. People are heavily rotating from meme coins, heavily rotating. So this is now people can basically hate meme coins. Nobody's asking which meme coin is gonna move next. Meme clowns are nowhere to be found around. This is the sentiment reset in meme coins I've been looking for presentation to presentation. Now I have it, and it's bullish. Google Trends is not totally bullish, but I think it's still bullish. It also shows you that meme coins, like just before or actually yes, like the meme coins in the Google Trends made new all-time high, and that happened basically in the mid-November as we started doing this fat outflow. So what basically happened that the meme coins basically reached their peak euphoria immediately at the start of the uh, basically after the elections, immediately after the elections, and that very moment when that peak euphoria was reached, all of these shocking and fat outflows have been happening. So this is well played by the market. Now but I include these Google trends as bullish because um, okay, so I have not changed this text. I apologize. This text is actually from the previous presentation. I have not rewritten it. I apologize. But what I would have written if I had done my job correctly for this slide, I believe I have done my job very well for the rest of the slides. But what I wanted to say in this slide was as well that Ethereum is at 28% comparing to its top from the June 2021. So Ethereum has a lot of euphoria left in the tank. And Bitcoin is at 66% when you measure it, when you compare it to like April or May 2021. That was like the peak euphoria when it comes to Google Trends for Bitcoin. However, Bitcoin is also quite known, so it will not be having like this more and more like bigger and bigger spikes in the Google trends. I don't believe that is going to happen. However, I still think that it could really retest or it could make a slightly higher high from the previous all-time high from spring 2021. It could happen, but definitely for Ethereum, it's very bullish to see that Ethereum interest in Ethereum is still low when it comes to the search terms, at least. My last bullish argument, guys, and this is Fibonacci extension. So do not, I've rated bold red, do not ignore this slide. I basically just want to tell you exactly the same which I told you the last cycle, the last presentation. There is nothing new on this slide, guys. You can skip this slide if you want to. But if you remember what I said you the last presentation, do not ignore. This, I believe, is going to work. And what I'm telling you this again, like in the last presentation, is that I have drawn these Fibonacci's from Bitcoin halving to Bitcoin halving. And Bitcoin is likely going to have around the end of March 2025, it's going to have very important swing point. It's going to be either a very important top or very important bot. And this can help you, this can be a game changer in your life to know this. And maybe if this first extension is not going to work, I think it will. It's very likely because it worked in the past in basically every single freaking cycle. But if it does not going to work, then the other will work. So these times are very important. And the next is March 2020, late March 2025. Remember that. That was all for my bullish arguments. Let's go into bearish arguments. My first bearish argument is the yield curves. I've just updated the yield curves. If you remember in my last presentation, I told you like they are nearly uninverted. I will not go down deep into the yield curve theory because there is so much said and written about it out there. So many analysts have been talking about it for the past few years. But this is now the moment when both of these are basically uninverted. The 10-year minus 3 month is uninverting as we speak, so maybe not uninverted today, but is about to uninvert. The other one is uninverted, but is not also skyrocketing. You also want to see some quite fast going up as well. So this is all like kind of a front running stuff, like telling you ahead of time. So you can just say that it's still probably a couple of months left, but based on this indicator, only as much. Now this is beautiful, beautiful work done by the Bitcoin Data 21. Beautiful work. He's written into the sheet like whenever we made in the S&P 500 all-time high, he's the year after that he wrote a performance of the S&P 500, okay, and that was these actually 1, 2, 3, 4, 5, 6, 7 years, okay, and now these 7 years he basically wrote every month a performance, and he made an averages. He put it here on the chart, and he even made an average from the whole averages, which is this fat red line, okay? And this fat red line, guys, is very clearly showing you that historically, like the next year after making all-time high, the next year is negative, guys. Like forget in this case, I don't want to like Tom Lee. I know I respect him. I think he's saying stuff like 7,000 next year and stuff like that. No, 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 no. I don't believe it. And also, moreover, what this also shows you is that it shows you basically January top, or maybe not January, but February top, to be honest. And sometime in the March, when the things start going wrong or so, and actually then quite a corrective spring, quite a lot of correcting in the spring, and then it basically tells you that there is gonna be a good rebound in the summer, but actually still probably bottoming out at the end of 2025 or around for the S&P 500. And you know, crypto is very correlated. Now, this is another way of looking at the things. This is from Bloomberg, and this is an averaged S&P 500 performance when the Republicans took over Democrats. So the following year, basically, which is the next year, 2025, and like you could not make this more clear. Okay, this is this red line here. Again, yet another, and this is non-correlated from the previous. The completely different analyst did this, and this is a different logic because this is comparison of the S&P 500 for the years when where Republicans came to power after Democrats, and the previous slide was about a year after we've made all-time highs. So this is a completely different logic and very similar results, guys. Like probably peak in a Q1, probably late Q1, or actually to be honest, now when I look at this, this actually shows you a little bit different sequence of things. It shows you a red year for the 2025, and it also shows you actually good summer, but it actually shows you like late summer peak, like maybe Q3 peak and then a crash in late Q3 and Q4. But the takeaway from this is yet again a red year, the next year a red year, not a good year, and also corrective spring and good Q1. Corrective spring and good Q1 is also what this is showing you as well. Now another bearish argument again from the CryptoCon. So he has his indicators that is not public, but he shows them occasionally. If you want to see them live, you have to be subscribed to him, to his services, and he calls them magic bands. And I think that these magic bands could be a real deal. And he was also often during the year he was saying that we are going to the level of 3, we are going to the level 3, and now we have hit the level 3 on 96,000. So well done to him. This really worked. And he also says that the top band for his for these magic bands is 130,000 as of yet, but it's going up and it's gonna be probably 140,000 in Q1 2025 or even more later in 2025, based on depending on where we would actually peak. You know, nobody knows for sure when we will actually peak this cycle. But we hit the level 3, that's bearish. Now this is where the liquidity is. My short squeeze prediction from the previous presentation did come true. Perfectly come true. Actually, I'm very proud of that predictions and that analysis. And now when I look at this, where the liquidity is, now it's pretty clear, guys. The liquidity is down. So when the market decides to take a liquidity, it's going to be downward and it's going to be to the next bottom ones we will be correcting should be just probably after 86k. So should be like it doesn't have to go that much lower, actually, like 85, 84, somewhere there probably, in my opinion. But liquidations will have to come. That's my bearish take. This is bearish. This is Bitcoin market cap divided by the open interest ratio. I regularly update you on this. I have, in my last presentation, I showed you that we have had this beautiful decline in the open interest slash market cap in the ratio, and which is very, very bullish because it means that people are no longer over leveraged. We have not had that flush ever since, not even a few days ago, unfortunately. So yeah, this is bearish. Crypto sentiment is, well, of course, like you can't say anything bullish about crypto sentiment today. Crypto sentiment is in extreme greed in all ways, shapes, and forms. And yeah, of course, you have these perma bulls, but also you have a bear, Mr. Wolf, who said that he sold at 100,000, and of course laugh, he gets hate for it. CO at 120,000 on inauguration day, ha ha ha. Especially with no rate cut in December, tax harvesting, few understand, yeah, like he's getting just hate for it. So like this is extremely bearish. The sentiment is extremely bearish. Now this is a crypto apps ranking in the App Store. Coinbase made it to top 10. I was tweeting about it. It means very clearly that the retail came back, and yeah, well, but we did not come to number one. So that is also very, very important. We did not come to number one in the App Store. But however, we did come to the top 10. This is also from the Bitcoin Data 21 work, by the way. He has charted for us all of this beautiful performance of the Coinbase up ranking all the way to the cycle like 2017/2018 peak. So you can even see that even there, this indicator was just beautiful for measuring how greedy we are, how much retail is around, because the moving average, the 7 moving average was just really almost, was like top 10. 7-day moving average was top 10 around the peak in 2017, and it was also top 10 in like spring, late spring 2021, and also it was top 10 in the November or October 2021. I don't think it's top 10. The moving average is top 10 today, but the rank itself was top 10 already. That's bearish. So this is the RSI for others. And so what actually this is from the Bitcoin data 2021. And for a change, this is, I think, the last piece of work that I have from him. And for a change, I am actually showing where I believe he's making a mistake, where he's ignorant to his own work, because people do that so often. I see it so often. Like, for some reason, like he's showing that we are hitting on RSI. This is for others, index others, okay? He's showing that we hit twice in 2017, okay, cycle, and then we almost hit it later on the top. Then he's showing that we hit it twice here in 2020. And this cycle, guess what? We've already hit it twice. Actually, we hit it 3 times. I believe this is very bearish. I believe this is very what he thinks he's showing us bullish stuff, because he draws a circle like, yeah, there's gonna be another hit here in Q1. But what I believe, he's showing us unknowingly very bearish actually analysis. So we've already hit this twice and 3 times, if this is even a hit. So like according to his, actually now this looks like more like top 2017. So this actually like could be for others, for the index others, it could be like a top according to this analysis, which is super scary, by the way. And now, when talking of scary, now we've had alt season, okay? There is no doubt about that we've had an alt season, okay? This is also altcoin index. It also shows clearly that we really had an alt season recently, and it's seen on all the charts like Ethereum versus Bitcoin and everything. Just all the altcoins were just going up, so it was like really clear. And um, yeah, just like I'm also getting lots of questions from the people, like because we had this 26% correction of like this open this funding fees reset recently that I just told you about. We've had it, and I'm getting lots of people ask me that, like, is it the time to buy more now? And so I'm going to devote the last slide in this presentation to this question: is this now the time to and what to expect in the reasonably short time frame? In my opinion, we have to see a sentiment reset in this late bull market, just like we always see sentiment resets in the bull markets, including January 2021, and of course then the big fat reset in the summer 2021. But I also think and I believe that we need to be two conditions will likely be met during this sentiment reset, and one of these conditions is fat funding fees, and another is euphoric sentiment. We have euphoric sentiment, absolutely, but at the moment we do not have a fat funding fees by far. So if we are going to have the sentiment reset and some kind of a correction like 20 to 30%, let's say, what price is it going to be from? So this is my another take. So in my opinion, I've already also shown you some arguments, including my Fibonacci, that was actually showing that we are hitting the first extension at the very moment. So it might as well be from the moment, from these prices we are in. This correction might happen also from this moment, guys. Okay, so that's also important take. But as for the total, this is total index. As you can see, there is a trend line. This trend line goes further. There is, I believe, it's hitting the top of the previous cycle as well. There is also Fibonacci. There is one Fibonacci measuring from the top of the cycle to the bottom of the cycle. Another Fibonacci is measuring this year's consolidation from top to bottom. and it's measuring extensions. And I can see that both of these Fibonacci's basically intersect around 4.4 trillion. So I have given you like this green box of the 4.4 trillion or around like above 4 trillion. I've also always talked about in my channel about 4 trillion being probably important, and probably there is going to have to be some correction around there. So that's why I'm giving you this box. That's where I believe it's the most likely that we will correct from. But of course, anything can be front run. Anything can be front run. And we've already been at 3.7 trillion. So we are already close. So yeah. And now, last probably slide, I think. What could be the sell the news event in the coming weeks? So yeah, I know about one sell the news event. Very clear sell the news event, which is going to be inauguration. So it is my biggest speculation probably that that actually it's going to be inauguration where this sentiment reset could occur at the latest, or it's going to occur now, or it's going to occur now. We are at the fib extension, or it's going to occur, in my opinion, as a second scenario, just around the inauguration, shortly afterwards, or just even shortly before that, around. Conclusion for this presentation. I'm not sure how long I've talked. I was really trying. I was really trying to talk less than 2 minutes per slide. More and more confluence is popping up with warnings of 2025 being poor year for equities. At the very, very late, or like at the very, very least, like the last quarter of 2025, based on the two beautifully done seasonal charts that I've showed you, macro charts. At the very latest, at the very least, the Q4 of 2025 should be extremely bearish. But the important thing is that 2025 is meant to be a red year for equities. Red year. And that speaks volume for crypto. At the moment, however, in the current situation, we are in euphoria, which is very bearish. Meme crashed. That is also bullish because they will come back likely at the end of the cycle and signal this is the end of the cycle by coming back. We are due for bull market sentiment reset though, with the open interest reset. Also, open interest, in my opinion, should go down, and it could be done only by, or quote unquote, only by 20-30% correction for the total index. That has not happened ever since we broke all-time high, and this correction should happen at the latest at the inauguration. Thank you for your attention, and I'm looking forward to make another quarterly presentation in Q1 2025.